Good morning, team. Welcome to Blue Sky Live's day trading stream. Today is October 8th, 2025. We're 7 minutes away from market open. I hope you guys are having a great start to your morning. I'm Coach Rizzler. I'll be your host through the morning and afternoon session. So, hope you're ready for a great trading day. Don't forget, we've got some fantastic sales going on. We've got our launch plans on sale for $49 and $59. We also have a flash sale. We have another $100 flash sale that's going on right now. So check out that flash sale because if you guys are looking for some great specials, nobody beats Blue Sky. I mean, nobody does. That's right. We've got $100 specials for 100, 200. Ooh, excuse me. 100, 200, and 300K accounts across all platforms. That's $100 flat rate, no funding fee. Nobody beats Blue Sky. So check us out. Don't forget, we've also got Coach Matt's free day trading class going on tomorrow after market close. So check that out because that is going to be a fantastic class. We offer a free day trading class every Thursday after market close. So if you're a new trader trying to get your questions answered and figure out how to get your edge in trading, how to get started in trading, how to set up your platforms, then these are the classes. Or jump in the Discord, jump in the live chat, ask those questions because I am here at your disposal to help traders just like you. Because I was a trader just like you a few years ago. Didn't know how to set up a chart or apply indicators. And now look at me out here coaching like I know what I'm doing. Hey, but you know what? That's life, and that's how trading can ultimately change your life. Take you from doing one thing and into something that you would have never dreamed of. And that's all I can say that trading has done for me. It has opened doors and created opportunities that never existed for me before. So I, for one, am living proof of what trading can do for you in your life. Good luck to you, traders. Let's jump in the Discord. I'm going to drop in a link in the chat. So if you guys haven't jumped in the Discord or joined, today's the day. Today's the day to get in the Discord because you know what? You're doing yourself a disservice. Find out all the great instructional material, classroom education to help traders like you find their edge. Good luck today, team. Let's make some money. Hey, good morning, team. How's everybody doing this morning? Making sure my chart looks right. Awesome. Oh, wait a minute. That is the wrong. Looking at my desk. Yes, sir. Hey, good morning, everybody. Good morning, everyone. Gold is a reppy. How about a little quick morning recap for us on NQ? NQ NASDAQ consolidated, tried to reattempt to regain some of the overnight selling price action. Gold just really consolidating. Targets for the day for upside, NQ needs to break 25,100. I'm sorry, 25,115. We need to break for upside target. We get that. We're made in the shade. I think we should be able to see some great upside targets. High side target for the day will be 25,275. Low side target would be 24,984.75. NQ lowest downside target I see would be 24,923 and a quarter. Now ES high side target for the day would be 6,802. We need to see ES break 6,777 for upside. Low side target will be 6,747.25. And lowest downside target would be 6,741.50. And gold. Gold needs to break 4,071.50. That's my target for us to see for gold to start breaking out. Don't forget, we've got a few news tidbits coming out this morning. So we got Fred Barr speaking. We got a couple of Fed speakers. We got a 17-week bill auction. We got FOMC minutes later this afternoon as well. We're a minute away from open, team. Good luck to you guys. Let's make some money. Silver moved to, oh my god, don't tell me that. Oh, look at that monstrous move last night. Wow. Silver was lagging the overnight. Ding, ding, ding. There's your bell, team. Let's go back to NASDAQ, see what NASDAQ is doing. Oh, market is starting to rip. Starting to move to the upside. Push into the upside. You ripping on that, brother? You ripping on that silver trade right now? What is silver doing? Silver selling now into the open, rejecting some. Looks like it might just give up what it put up on the board. Oh, look at that push. You guys know I'm not normally this bullish into the morning session. Well, I went trigger happy this morning. Oh, look at the market pushing 25,101. I went long at the bell. Oh, nice, a fluid. Kill it, brother. Kill it. All right, I'm gonna put my stop in the money here on this NQ trade. It's a beautiful trade right there if I do see so myself. Look at that. We started off guns blazing here in the morning. Let's go. Holy Toledo. Look at that move on NQ. That is monstrous. Ace. Where's Ace? Right? We got another crazy start to the day. We have been nailing it. All right, morning imbalances. S&P 180 million to the buy side. NASDAQ 5 million to the buy side. Dow 39 million to the buy side. Mag 7 8 million to the buy side. Holy Toledo, we are ripping. We're ripping on this trade. Whoa, boy. What's Bitcoin doing? Bitcoin ain't doing nothing. That's insane. You know, yesterday what we ripped what seven a little over 7 G's on that trade that we did. Now we're gonna start off the day 6,500. Market is repping. It never does. So I don't like to try trade ES. It's just too it's always too slow. It's just always too slow. For my visual appeal or what, works for me, that doesn't work for me. Hey, what do you guys think about the new layout? You guys like the new layout I put together? I worked on that last night. Must have action. We do. Yeah, it's a lot better than the old one, right? The old one was a little like, nah, I didn't like it. Rejecting the 200 EMA here on the 12 minute. Got a minute left. Let's see if we get that push through it, or if they're gonna wick us down. Come on. Take a look at what gold's doing. Starting to kind of push down. Affluent might be onto something there with that same day trade he's got. I think he was shorting silver. I was just playing the gold move at the open, like Coach Matt was talking about last night. Very clean, right? Very clean. Kind of beautiful move on NQ though. Market's holding right now. Got over the 200 EMA here on the 12 minute. Let's go. All right, made my cheddar for the day, going out to breakfast and taking the day off. Might pop in a few minutes later today. Shh. I'm loving it, broski. I'm loving it. Great work there. All right, there's your top stories for the morning. Let's pull up the calendar so you guys can see the calendar that's happening here in the morning session. What do you guys think about that? Look at that. We got a ticker. Now I've got an event calendar on the same chart. Look at that. Flawless. Y'all should wait. If we do have any live streams, I've got that even set up even better. Look, check this out. I even got the volume metrica chart. I think this is the right one. Let's see. Yeah, look at that. And it's not flickering. I was doing some work last night. I tell you, I was working overtime. But I'm fairly happy with the way this one looks. This should be. Oh, I don't have the side by side on. Oh wait a minute. Oh, now I even got a side by side. Oh, where is it? All right, let's get back over. Oh, this kind of is ripping to the upside now. That's right, my friend. That's right. Yeah, that's another solid day right there. It took that long. Just been gelling in it in the morning session. I'm really proud of yesterday though. Yesterday was amazing because you know what? It's been a few weeks. I've been with you guys for a little over 2 months, and I hadn't had a monster trade, and I think that one counted as a monster trade. So I'm glad I got mine on stream with you guys. A few minutes from the orbs being created. I'm going to go ahead and adjust them because we're not very close to them at all. We're fairly far away from them now. Looks like NQ is rejecting the 200. Stick a gander over at ES. ES is already selling. ES is already turned around. Ugh. What's Bitcoin doing? Oh, Bitcoin is starting to sell. Huh. Wow. Wow. Gold looks like it's turning. Nasdaq kind of holding though. It's holding at 200. All right, who's lying here? Who is lying? ES is selling. NQ is catching a bid. Let's take a look at the Dow. The Dow is selling. What about the Russell? Russell is selling as well. Hmm. I don't like that the market is dipping. We haven't finished the orb, but I'm just kind of eyeballing this thing. Fast price, average price. AI is lying. It might be. I think I'm gonna cut this. I don't like the rejection. Yeah, I'm gonna cut this because I don't want to lose the 14. Let's just dip out. I don't like the way ES and everything else is selling. So it just worries me that Enki's gonna just turn around and start because we know it'll set that high in the morning, and then we'll get a pullback, and then we'll start to move, make that leg up. You know, you get the people that swung trades, and you got those aggressive traders like myself that they'll create that upside move with the buying pressure, and then they'll take their profit, and then this thing will just start to hammer down. That's a good start to the morning, though. Oh man, Bitcoin is dumping. Yes, it's holding. Looking like it wants to retest. Let's open up the heat map, see what's happening across the indices. Massive opening range. Yeah, yeah. It 70 points, a little over 70 points of range right there. All right, so your 15-minute opening range break on NQ, high side will be 25,153 and a quarter. Low side will be 25,073.75. Man, I should have held that long. Hindsight, right? Hindsight. We're all good though. We all good. Can always get back into it. Just gotta wait for that entry. Just gotta wait for that perfect entry. That's all we're doing. Taking our time and looking for that magical entry. Yes, it's starting to move. Testing the 200 on the 15. This is very good. Yes, now breaking out above the orb high, above the 200 EMA on the 15. Let's go. Let's send it. Yes, he's trying. He's struggling now. Why is this so small? There we go. Watching it, just waiting to see. Oh man, yes, just can't get over it. Nasdaq struggling at that orb. Yep. And Q's still struggling at that orb high. Get back on the heat map. Some red on the chart. Substantial, you know. There's a lot of neutral, but there is a lot of red on the chart too. I bet you that's not the case with NASDAQ. Yeah, you can see that with NASDAQ. A lot less red, more neutral. NVIDIA chips carrying the mark in Q this morning. So definitely. Let's go back to the S&P. We need some banking. We need banking to step it up or something. Banking. Maybe we'll get a little bump in some healthcare stocks or something. Help the market. Gold gold holding 40,000 40,005 56.60. So 40,056.70 is where we're kind of at right now. Like a flag though. Let's see. Yeah, It looks a little flaggy, but looks like it wants to push down though, unfortunately. Yeah, look at NQ. NQ now broken out the orb high, setting a new intraday high. Intraday high at 25,169.50. All right, let's move back over to news, top stories. Yeah, starting to make its move now. Where's my? Oh, look at that move on NQ, pushing at 25,178 and a quarter. Woo wee! Good, looks like it wants to sell. Bitcoin trying to catch a bid. Who's NQ? Yes, now trying to make an attempt here at the 200. Let's go, General. Let's go, General. Hey, don't worry, man. That's the volatility of the morning session. Definitely something we are aware of, and we just manage our risk on it, right? Imagine if you sold those puts and bought calls. Who's in puts? Son is all like, what should I trade? Oh, let's go. Bitcoin's breaking. Holy moly. Oh my. Oh Lord. I'm stacked up on Bitcoin calls. I'm a perma bear, and even I am long. I got one for you, General.
Short America.
There you go, General. There you sorry, Tim. There you go, Tim. Yeah, I even got it on the
Short
screen
America.
now. I got it on the screen now. I'll tell you what, though. Market is repping to the upside. That's right, boys. We are ripping to the upside. Yeah, we are off to the races. ES is now broken out of the 200 EMA, pushing 6,781.50 to the upside. Ooh, look at that candle. There you go, baby. There you go. And I just told my son to go long on SPX a few minutes ago. So he probably got that nice candle. Man, his classmates are going to be asking him for financial advice. Yeah, he left a silver swing trade over the weekend, so he took a nasty hit on it. He failed to tell me that. I was like, no, man, you're gonna swing something, swing SPX. If you're gonna risk it for the class project, just swing some SPX cards. You catch an S bounce on Monday and be in the money. I know his trade yesterday killed it. I don't know if I've gotten him out of the red though. Man, now I'm helping my son get out of the red. That's for you YouTube viewers out there, I just dropped the link into our Discord. Don't forget, we've got some fantastic classes coming up this week. We've got Coach Matt's awesome day trading class coming up. We've got that happening, so make sure that you guys do catch that because that is going to be a fantastic class. That happens every Thursday on Market Close. So make sure that you guys scope that one out because it is a fantastic class hosted by Coach Matt, one of our veteran traders with over 15 years of experience in the market. That's right, team. So if you guys are looking to find your edge in the market, week by week, having a mentor, that's who you want to talk to. No charge. He's there every Thursday like clockwork. What are you waiting for, team? What are you waiting for, team? Sign up, get that money. Let's get paid. Sign up and win. Make get you know get that edge. Also, don't forget we've got our launch plans on sale for $49 and $59, and our flash sale. Our flash sale is going on yet again. Another $100 flash sale, 100, 200, and 300 Ks. Let's go, General. Profit target just got hit. I actually just exited out of those calls. I had an 18 cent price target on it. So took those already. My Bitcoin, but I'm stacked super huge in Bitcoin right now. I'm stacked. I am symmetrically stacked. That's a good day though. Man, wow. Portfolio is up 47% for the day. Let's go. Trying to find your edge in the market. Gold, bro. Gold is the edge in the market. That's all it is. That's incredible. Well, congrats, General, on that one. I dipped out though. Took my money and ran. Is Bitcoin gonna break out? I hope so. Gold GS now at 6,785.75. Look at NQ pushing 25,212. I'm so mad at myself. I should have held that longer, but you know, 1.4K, that's just too much for me to just, you know, turn around and be like, oh, blah blah blah. I'm not gonna take profit on it. I totally forgot. I got SPXS calls. Man, these things were up 300%. Holy moly. Yes, I already got lungs. These things are up 300%. Holy Toledo. Goes yes. Making that move. I need something with XPSS. Let's see where that is exactly because I got puts on that. 35.50. Right. There. Boom. Come on, Bitcoin, do it. Just send it. Hmm. Interesting. Oh, that's the got it. Nacho, every day's a good day in Vegas, bro. I don't know what I would do in Vegas, bro. You know, I think if I went to Vegas, I'd just go do shows and stuff like that. I probably would test some of my roulette strategies because I have some pretty cool roulette strategies. But then beyond that, I don't know. I just chill. Check the main chart. There it is. There it is. That's what I was looking for. See, now I got the side by side charts. I know the guys are gonna like that. They've been asking me to bring up the volumetric charts. Now I've got side by side. Have you been to Red Rock Canyon? No, I haven't. We get one of those monster large. You know what? You don't have to ask me twice. I would straight up be like, what was Griswold's? I'd be like Cousin Eddie. I would literally be like Cousin Eddie with some yard with like a margarita in it, or well, not a margarita because that's too tardy for me. There'd probably be like a pina colada in there because that's when I'm on vacay. That's how I know I'm on vacay. I'm drinking a pina colada, either that or Miami Vice. I said it. Exactly, bro. Exactly. That's probably what my nephew and niece think of when they see me, and it couldn't be further from the truth. They give me that look like they're the normal ones. I'm the weirdo. What's Bitcoin doing? Bitcoin's just kind of just oh, it's winding up. It looks like it's it is. It looks like it's just winding up, just priming for that launch. Man, what an incredible morning with the market just ripping to the upside, right, team? Hola mole. I guess I could have gotten a few more cents out of that thing. My son over there trading at school. Chihuitas, that boy, I swear. Well, after that healthy move here in the morning session, looks like the market is taking a little bit of a breather, catching its breath. That's right. We are ripping, General. We are ripping to the upside. So longs are in effect. I like it. It's like gold wants some push. Really depends on what the candles form here. Are we gonna make a bull flag here? That'll be the better question. And he can pull back down into 25 153. So if you're looking for a trade, I would look for an entry around 25 162, maybe 25 174. I think we should see more upside, but the market can always turn on us. You can see the S&P has a little bit more green. The red is starting to subside. More neutrality is starting to take a hold of the market. So probably recovering some of this red. A whole lot of green in NASDAQ. There is some red though still in there. So looks like the finance sector, like I mentioned earlier, is starting to turn on us to the upside. So, but that's mainly for the S&P. Ooh, Bitcoin just had a nasty shell. That's had a nasty shell on that. Mm-mm-mm. Is smoking a pancake? I was watching that break to the downside on ES, but she had a different plan. I'm wearing my Bulls hat right now. Let's go Bulls. Yeah. The goat. So I was fielding some questions. There you go. Start pushing to the upside again here on ES. Goes yes. Testing that high again. Testing the intraday high at 6,789. Intraday high on intraday high on NQ is going to be 25,231. We're pushing, team. We are pushing towards it. Where's my Chrome browser? Go here. Crude oil inventory has just dropped actual down 0.763 million. For previous was down 0.271 million. NQ kind of stalling out here. ES is starting to push though. ES is like creeping along. Really? Let's see. Bitcoin struggling. No, Tip, that's a gold member. That's a Austin Powers reference, bro. Gold member when Austin Powers meets Gold member, he's sitting at his desk and he starts offering him food. Smoking a flapjack, crep in a bong. Oh wait, no, it's a blitch in a bong. I mean, right now the chart is bullish. The thing you need is with those contracts being so far out the money, they got to expand. I mean, they're still sitting at 18, 19 cents. Bears don't play with cats. That's right. Yeah, those 667s are sitting at 22 cents right now. You should be able to get out of those with some money. And you got 20 of them. That's some good money. I hope you have your stop in the money. Should not be unprotected on that position, broski. So gold is starting to slow down some. And Q rejecting some at that high at 25,231. That's your high side intraday target now. Seem for yes. Yeah, I'm just trying not to get out too early like I did yesterday. I feel you on that. But you know what, bro? I mean, it's still. I get what you're saying. You know where I struggle on that? I'll see. I'll take it, the reference on it. I struggle on that when I think about compound gains. You know? Yeah, I feel you on that. You know, but the only problem you'll have with it is that the long will be a very slow grind, where the short was just kind of fast. You know, we didn't have to wait most of the day for it to do what we wanted it to do. It's the only disadvantage, you know what I'm saying? Bitcoin's rejecting still. Shh. Chihuitas, man, I tell you. I was hoping that we might catch something on that. I want to see a dip. All right, Tim, I'm going to go take a quick break. I'm going to go grab myself a quick coffee. Bathroom. BRB. All right, team, I am back. I'm back. Beautiful morning time to do some line work. Have a good trading day, boys. Hey, thanks, Nacho. Have an awesome day. Thanks for hanging with us today. Gold is starting to move to the upside. Market kind of running out of get up and go. You know, 2 more days on that. Chihuitas Bitcoin. You cannot just get up there. So frustrating. Got Fed speakers coming up. Do you guys want to watch that feed? Y'all want to hear the Fed speakers? Got 2 Fed speakers, and they're speaking twice today. Yeah. Okay. Sounds Gucci. Let me see if I can get that for us. Register here to watch. Oh, it's a Zoom. It's a Zoom meeting. Let's open this in a different browser. Chrome is not working too well. I could have sworn I had Zoom on here. Oh, I don't have Zoom. That's why. Well, let's open up Zoom then. I passed the eval finally. Took a control loss on the other. Tomorrow we blew live before my flight. Let's go. Let's go. Well, fantastic. Good luck to you, my friend. Hope you kill it tomorrow. So this work now? Sign in. See if I can get into this. Let's see. How do I do this? Could always make another chart. Let me make another layout real quick. Let's see. Let's go into duplicate. You can't see it. That's the workspace. meaning space. Well, how do I capture the rest of it? What is this? I don't know what that is. Huh. Huh. This is so weird. Oh, there it is. There it is. I got it now. Is that a filter? Add a crop to this. I can just. All right, let's see if we can get the Fed speaker up here. And oops. Whoa. I thought it was a lot smaller than that. Holy moly. How big is this thing? Oh, dang, that thing is huge. No wonder. I was like, why is this thing? What? $25K NAS crash market is being a pest. That's what she said. Sorry, yeah. Sorry, I'm trying to get this zoom on here, but it is huge. I don't understand why it's that big. I don't understand why this thing is so. I'm still trying to resize that window. I just don't understand why it is so oversized. And I've been resizing it. I don't know how many times now, and I can't get it to where it's the right size. It's still too big. Client area. No, we're removing this. Move that. Let's add it again. Let's see. I'll just capture this. Oh, there we go. There we go. Look at that. Just adding it. We got it. There we go. Finally. So I didn't realize this was going to be a Zoom, so I wasn't adequately prepared. So I hope you guys don't mind. A little on the fly adjustment here.
There are four columns of people, and then there's a four bad and then they just stop. They just open the bag.
So, ladies and gentlemen, welcome to this 25th lecture in honour of Professor Maxwell Fry. I'm delighted to welcome you to this annual memorial lecture in Maxwell Fry's honour. My name is Jane Binger. I am Chair of Finance in the Department of Finance here in the University of Birmingham. I'd like to say a few words about the background of the lecture.
Sounds like it was people talking in the class.
Maxwell Fry received his PhD in economics at the London School of Economics in 1970 and taught at the City University of London for 4 years. In 1974, he joined the Department of Economics at the University of Hawaii before leaving to teach at the University of California, Irvine in 1980. Shortly after this, he accepted an endowed chair as Professor of International Finance here in the Birmingham Business School. He passed away prematurely in 2000, and remember him each year at this time. Max was a prominent figure around the world in international finance, and his work was widely acclaimed in central banking circles. His contribution was in the fields of international and development global finance, and this annual lecture is given by an internationally leading academic or policymaker on a topic that reflects Maxwell Fry's interests. Max was very well liked by all, and he took particular interest in helping early career researchers to develop. Those of us here today who knew Max miss him very much. We're particularly delighted this evening that Celia Fry, Maxwell Fry's widow, is also here to join us at this time. I would like to introduce our speaker this evening, Hugh Hill, who is the Chief Economist at the Bank of England. Hugh started his career as a research economist at the Bank of England before moving to serve on the faculty at Harvard Business School in 1995. Hugh then moved to the European Central Bank to serve in the Monetary Policy Stance Division and as Deputy Director of Research prior to joining Goldman Sachs in 2011. Hugh served as a senior lecturer at Harvard Business School between 2019 and 2021, at which time he was appointed as the Chief Economist at the Bank of England. In this role, Hugh is a member of the Monetary Policy Committee and is responsible for all of the data analysis to support monetary policy decisions. Hugh Hill is also really very popular in his role and has been reappointed for a new term of office for 3 years from September 9, 2024. I'm delighted that Hugh has accepted our invitation to present our 25th annual Maxwell Fry Global Finance Lecture. Hugh remembers the work of Max very well, and we're honoured that Hugh will be speaking this evening. The title of our lecture this evening is Uncertainty, Structural Change and Monetary Policy Strategy. Ladies and gentlemen, let's welcome Hugh Hill.
So good afternoon, everyone. It's a great pleasure to be here, and I would like to thank Professor Bidder for her invitation to participate in today's seminar and lecture, and of course to everyone else who helped organise. I know these things don't happen by accident, and there's a lot of work done behind them. I'd also like to thank the Money Macro Finance Society for their organising both this lecture and the preceding workshop. That's a society that is very close to the heart of the Bank of England and is an important stakeholder and collaborator with us in lots of work we're doing around the outlook for monetary policy. And of course, I'd like to thank Birmingham Business School and the University of Birmingham for hosting us all this afternoon. By the way, that was a very nice introduction, but I've never been described as popular before. So I don't know quite what to make of that, but perhaps we can discuss later. And I may be less popular at the end of the lecture than I am at the beginning, we'll see. Anyway, it is a very great honour for me and a very deep privilege for me to deliver the Maxwell Fry lecture here this afternoon. Professor Fry was one of the leading figures in the field of money and finance in economic development. So I am a bit perhaps biased by my own education and institutional affiliations in the past, but on my reading, that literature was driven by 4 seminal contributors: Gurley, Shaw, McKinnon, and Fry. So I personally was very fortunate to have the third of those, the late Ron McKinnon, as my doctoral supervisor in the early 1990s. And as a result of that, and of course under the direction of Ron, I read and learned from many of Professor Fry's papers, including, of course, what I think was his magnum opus, of which there were several editions, of which I read all of them, Money, Interest and Banking in Economic Development. So while I was personally never fortunate enough to be taught by Professor Fry, and I know others were in this room, I certainly benefited very much from his knowledge and insight. Indeed, I'm pretty confident. I can't be for sure because these processes are double-blind. At least they were when I used to contribute papers to academic journals. But I'm pretty sure Professor Fry was the referee for one of my very first published papers, and those of you who are academics in the room will know that is quite a big deal. And that was a paper which resonates me given my day job sitting on the Monetary Policy Committee, because it was about the mismeasurement, or the measurement/mismeasurement of the natural real interest rate, owing to difficulties in an environment of deep structural
the way the rest
change.
of the market is.
And I think the fact that that's an issue that he was contributing to 30 years ago, I think I was writing about 30 years ago, and yet is very much at the centre of the discussions that take place in the Monetary Policy Committee, demonstrates that he had a deep insight into things that have had very lasting importance. And that's something I'm going to come back to in a moment. So coming from the Bank of England, I also think I should recognise that Professor Fry directed the Bank of England Centre for Central Banking Studies in the mid-1990s. And I think he set it on a path that we as an institution continue to benefit from greatly today. So amongst myriad responsibilities that seem to fall to me, one of them is being the responsible person in the bank executive for the CCBS. And certainly I and the current director, his colleagues, are all grateful and benefit from the intellectual direction that was provided at the outset. So both as an individual and as part of the wider economics community, and along both academic and policy dimensions, I think we have much to celebrate in the contribution of Professor Fry to our profession.
That's kind of what I was thinking,
It's also a privilege to follow in the footsteps of many other people who've spoken in the past. So you said this is the 20th, so I guess there's 19 previous people who've spoken at this event. As I said, my advisor was Ron McKinnon, and I think he spoke in one of the early lectures. I think you are obviously intellectually and personally indebted to your doctoral supervisor. That's something probably you realise after the fact rather than in real time. And that's something, if any PhD students are in the room, I would remind you of, is cherish your supervisors, because you are benefiting a lot from them. But I also sort of read, and it depends on how you count, but there are at least 3 former Bank of England chief economists who've spoken in this lecture series, who've all gone on to better and greater things. So perhaps, fortunately, given what's likely to happen, I don't have great aspirations or expectations in those dimensions, but I will draw particularly on, I think, the important lecture that William King gave in this series back in the early 2000s, in what I say in a moment.
Maybe we'll see Bitcoin move up as well.
So let me turn to the substance of the discussion today. And as ever, we do live in changing times. And what I want to talk about today is often my view of how rapidly changing economic circumstances, at their heart, greater uncertainty in the economy, driven by changes to the institutional context and deep structural transformations in economic behaviour at both global and national levels, how those deep underlying forces are influencing the design and conduct of monetary policy. So just to be clear up front, I'm not here to discuss the immediate economic and policy conjuncture, what you might call the policy stance. So if anyone's dialed in expecting me to tell them what the next interest rate is, I'm not going to do that. And if you think I have, then you have misunderstood, to paraphrase a famous remark of Alan Greenspan. And I'm also not going to engage in a discussion about the minutiae of central bank operations, or what you might call monetary policy implementation, although that is a topic which is being discussed in many newspapers at the moment. That's not to say that I think those issues are unimportant, still less uninteresting, but I can't do everything in a lecture in one go, and I have discussed those issues on recent occasions. So what I am going to do, which is perhaps more relevant, is I'm going to discuss how, or what are the implications of underlying secular changes in the economy for monetary policy strategy. Now, I think this is quite well-trodden territory in the academic and policy literature. And I do want to warn you from the outset that I don't have much to offer in terms of novelty.
15 more minutes till the London.
Indeed,
that's right. We're in London Power Hour team.
The main message of my remarks this afternoon is the following. In a world of radical uncertainty and deep structural economic change, the world we live in my view, if anything, more weight should be given to robust, eternal verities in running monetary policy at the expense of pursuing fragile, optimizing approaches specific to a given set of often ephemeral circumstances. Now, of course, that statement begs the question of what are those eternal verities? Who decides what they are? So I will try and give you some views of how I view that question today. And I think it's also perhaps important to recognise the different perspectives that academics or students bring to that question relative to that of policymakers. I think to become famous as an academic, you want to challenge conventional wisdom. You want to prove that something that's thought of as an eternal verity is either not eternal or not a verity, or neither an eternal or a verity. Whereas sitting on my side of the fence, sitting in the Monetary Policy Committee, facing a very difficult, challenging environment, we're continually looking for something that we can hang on to, something that can give us guidance in an uncertain world. Now, the main message, the message of relying on more robust eternal verities, that might sound to many of you as a call for more conservatism in central banking. And it is a call for more conservatism in central banking. There's a very large economic literature going back to the 1980s and before. And there's a large experience reflected in the fact that the Riksbank and the Bank of England, central banks that were set up initially in the late 17th century as independent institutions of government, there is a lot of need to recognise the benefits of conservatism at central banks and independence at central banks, and in particular, the benefits of conservatism in the design and running of monetary policy. That conservatism relates to what the objectives of monetary policy should be, what the instruments of monetary policy should be, maybe what the communication and conduct of policy should be. It doesn't necessarily relate to saying, we are uninterested in the latest research. We are uninterested in challenge. We are uninterested in adopting new ways of doing things which are more efficient as technology improves, as experience and knowledge widens. And of course, there are many activities that central banks do beyond monetary policy, I think particularly at the moment in this area of payments, that are very dynamic and innovative, where conservatism may be a hindrance. But I do want to argue on the core element of monetary policy, that conservatism is a principle that is worth preserving and enhancing. Now, I think the message I gave is also a message that would resonate and does resonate still with the seminal work of Maxwell Fry and his collaborators in the field of money and finance and economic development. So if we were to translate that name of that field into more contemporary language, we might label it something like monetary and financial management in an emerging market. So for me, the defining feature of an emerging market is its implementation of economic and financial reforms that fundamentally change both its internal institutional framework and its relationship with the rest of the world. In turn, those policy and institutional reforms prompt substantial changes in economic behaviour and thus in the structure of the economy itself. And in turn, those initiatives both change and are intended to change the beliefs and expectation formations of firms, households, investors and entrepreneurs, ideally in ways that promote better economic performance. In fact, in the workshop, Stefano talked in the last session exactly about how, perhaps in a slightly different context, this changes in expectation and belief processes can influence macroeconomic outcomes. So I think this is something that resonates even in contemporary academic literature. So the broad message of that literature is that market-oriented financial deepening can improve allocative efficiency, innovation and dynamism, and ultimately economic performance and living standards. But, and this is the crucial caveat, that will happen as long as markets and banks are appropriately regulated and macroeconomic policies are stability-oriented and sustainable. Now that combination, deregulation, financial deepening on the one hand, stability-oriented and sustainable macro environment on the other, that is easier said than it is achieved. But it is this insight that, at least on my reading, lay at the heart of Professor Fry's work. And it remains very relevant today, not just in emerging markets, but also in advanced economies. So, for our purposes today, the read across to a developed economy in the modern era now is that monetary policy should be resolutely focused on price stability, even as institutions evolve, economic structure changes, and uncertainty rises. So just applying this to my day job and the situation in the UK, I think we need to recognise that the UK economy, as of now, is facing substantial institutional change, owing, amongst other things, to Brexit, to the regulatory initiatives that were introduced following the global financial crisis, and of course, and most immediately, to ongoing disruptions to the international multilateral trading system. But the UK economy is also experiencing, at least potentially, this remains a matter of controversy, structural changes in key economic sectors, notably, in my view, in price and wage setting behaviour by firms, especially in the aftermath of the COVID pandemic. And I gave a talk earlier in the year, in the spring, around my reading of how we might need to be thinking about the potential for those structural changes. And the UK economy is confronting the possibility, and this draws very closely on Stefano's work that we heard about, a subset of us a few minutes ago. The UK is also confronting the possibility that expectations formation may have shifted, and households and firms are paying greater attention to inflation developments in taking their economic decisions, with some price changes, for example, around food, proving more salient in how they revise their expectations than other price changes. And this is an area where, beyond Stefano, there is a lot of academic research being undertaken, including by a number of my colleagues at the back. So in that context of institutional change, structural economic change, and changes in expectation formation processes, the messages offered by Professor Fry and his colleagues in the field of money and finance and economic development are surely germane for policymakers today. And my own view is, and I have a bit of skin in this game myself, so I don't want to sound too self-serving, my own view is, long overlooked by conventional macro and monetary economists, the important but underappreciated literature in money and finance and economic development, and particularly the lessons it contains, are long overdue a rehearing in the monetary policy community, and indeed elsewhere in the economics profession. So let me now turn to more discussing the issues around monetary policy strategy. So on a previous occasion, about 18 months ago, at a talk at Cardiff Business School, which I guess is one of your competitors, I did describe what a monetary policy strategy was. And I said, it's a systemic mapping from developments in the economy, what you might call the data, into policy decisions, so instrument settings, the level of bank rate, the type of things the MPC spits out every 6 weeks, in the pursuit of the policy objective, price stability. So I'm not going to revisit all of that discussion today in its entirety, but there are a couple of things that I do want to say. So the first is, at a time when, for the reasons I've discussed, there are so many other sources of uncertainty in the economy, it seems to me that it's even more crucial than normal that there's no ambiguity about the objective of monetary policy, and defining that objective must recognise the constraints imposed by economic logic. You can't ask monetary policymakers to deliver something they cannot deliver. But it also must, in order to remain legitimate, that objective must serve wider welfare goals. It has to be something that people need and understand why they need. So in my mind, one of the eternal verities, which I think it is important to keep in mind when thinking about the implications of recent developments for monetary policy strategy, is what economists call the classical dichotomy. That says that in the end, monetary policy can only affect nominal developments in the economy. And in that environment, we should be very cautious, in my view, in assigning monetary policy responsibility for real economic outcomes, such as short-term developments in unemployment or growth. Because over that longer term, when monetary policy has its most important effects, and where we know most about its implications to the economy, all monetary policy can do is determine the nominal dynamics of the economy, the inflation rate. So, of course, I don't want to be deaf to the important literature that some of you will be aware of about hysteresis effects in the macroeconomy. And I do also want to recognise there's a big literature about whether monetary policy can have long-term effects through the accumulation of debt and so forth. But I do think that monetary policymakers shouldn't necessarily be too diverted by sort of tweaks around what the big message is. And the big message is, in the end, monetary policy can determine the medium-term rate of inflation. Indeed, it can do nothing else, little else. And there is nothing else that is going to determine the medium-term rate of inflation. So as a result, monetary policy should be accorded the goal of getting the rate of inflation at that horizon at a socially desirable level. And that socially desirable level is low and stable. It is to create an environment of price stability. So for me, price stability over the medium term is the appropriate objective of monetary policy. It's both achievable using monetary policy instruments and by creating a stable environment conducive to efficient longer-term investment and spending decisions. It also supports the innovation and dynamism that drive productivity growth and improvements in living standards. So Alan Greenspan famously defined price stability as a rate of inflation that was low enough not to influence firms and households' economic decisions. But in the UK, we've got further. Our monetary policy framework says, or defines the objective as an explicit 2% inflation target for a specific price index, the consumer price index, which holds at all times and penalises upside and downside deviations from that target in a symmetric way. So that's a more quantitative target. It's a clearer and simpler target than Greenspan's definition. It provides a benchmark against which monetary policymakers can be held accountable, and it's helped to anchor longer-term inflation expectations. And I think the benefits of having this have been amply demonstrated by recent experience. By what contrasts with what we saw in the 1970s and 80s, a distribution of inflation that's captured in this chart by the blue curve, the substantial external shocks to the UK economy in recent years, so I'm thinking here particularly of the rise in gas prices following the Russian invasion of Ukraine, they haven't triggered a substantial de-anchoring of inflation expectations from the target. And indeed, over the inflation targeting era, that is the curve captured here in the red line, you can see that there's a much stronger tendency for inflation to stay close to the 2% target. And the mass in that probability distribution is really concentrated very closely around that. So I think the experience in these two periods is quite telling in terms of how the outcome would be. So what I think is kind of important here, and here I'm referring to Mervyn King's lecture from the early part of the 2000s, is that one of the reasons why you need to be unambiguous about your inflation target, have a clarity of inflation target, and clearly pursue your inflation target with high credibility is that in the standard monetary policy model, which I put up here, and some of you will be very aware of, there is no benefit to having any uncertainty about what economists typically call pi star. Uncertainty about pi star in this environment simply adds to the volatility of the economy, simply adds to the losses that are induced by the economy, and that's kind of an unnecessary space of uncertainty that we can and should eliminate. What I'm going to spend the rest of my time talking about is maybe that is not true, and it's increasingly untrue, of the other star variables in this very simple model of the economy. So particularly when you're certainty about what the neutral rate or natural rate of interest, the famous R star, might be, or you're uncertain about where the productive potential of the economy, Y star, might be. And there are lots of reasons in the current environment to have uncertainties about those things. It only increases the need to have no ambiguity of where inflation is going to be or what the inflation target is. So the basic message in this environment is that we shouldn't have that target vary through time, which shouldn't be ambiguous, it should be fixed. And we have a clear target set at 2%. In the UK framework, that's set by the Chancellor in an annual remit letter to the Governor of the Bank of England. But at least thus far, that has been very stable and rightly so. But of course, it's not really enough just to say, be clear about your target. There is a kind of body of opinion that says, be clear about your target and just say the MPC will do whatever it takes to achieve that target. And indeed, ultimately, the MPC will have to do whatever it takes to achieve that target. And the MPC has, on occasion, had to be somewhat innovative and experimental when we hit the lower band during the financial crisis and so forth. But I think it helps the achievement of that target if you can be explicit about, or more explicit about what this mapping from data developments to instrument setting is that will allow you to pursue and achieve the target. So in a different speech from his speech in this lecture series, Mervyn King, Lord King as he is now, only offered one account of how that mapping might work. And that mapping was based on a model very similar to this. And essentially what he said is, if you know a lot about the economy, and in this setting, you know everything you need to know about the economy, it's not that the economy is totally without any uncertainty. There is an irreducible amount of uncertainty about how inflation develops. That's kind of a costward shock or something like that. There's an irreducible amount of uncertainty about where economic activity is. That's some sort of demand shock. But we know the structure of that uncertainty, and crucially, we know mechanically what the relationship between changes in our interest rate policy instrument are and what implications that has on the wider economy. So in this environment, if you're hit by an inflationary shock, what happens is if you have been explicit that you're going to address it and return inflation to target, private markets will respond to that inflationary shock. They will reprice financial instruments in a way that means that the need for a big policy response is mitigated by the fact that financial markets are already incorporating future bullish shocks. And famously, Professor King, Lord King, Mervyn King, Governor King, all of the above, famously he said, this was akin to a famous goal scored by Diego Maradona in the 1986 World Cup. Now that may be a bit before many people in this room's time, but famously that was an occasion where a footballer was running towards goal and it looked like the defenders were jumping out of his way and just opening up a path for him to go towards the goal. And this is sort of like the analogy to, as those inflationary shocks, as the best footballer in the world is running towards goal, he feints one way slightly, he feints the other way slightly, but because the defenders react to that, they clear a path to the goal. And that means that, the metaphor is that as the Bank of England is committed to achieving its goal of price stability, it will induced behavior by financial markets that allows that price stability to take place. But what I think is important to see is that for that set of mechanisms to apply, you need to have a pretty clear idea of what the structure of the uncertainties you're facing is. You need to understand what the nature of the economy is. You need to understand how what you do with monetary policy affects outcomes, inflation, and so forth. And you need to be able to assign probabilities to the types of uncertainties that you face. So in this space, which is taken from some recent research undertaken, or forthcoming research taken from my colleagues working at the Bank of England, in this space, you need to be in the top left-hand corner. You need to know a lot about what is the things threatening price stability, the shocks that you face, and you need to know a lot about how your actions can contain those things. If you know those two things and you communicate clearly, you can run monetary policy in this kind of hands-off way. But as this chart is intended to show, in practice, we don't know so much about what is driving the economy. We're facing a whole set of uncertainties which have moved us from what Lord King famously called as the nice period for monetary policy, a non-inflationary continuous expansion period, where the economy was evolving in very predictable ways, to what Ben Broadbent, the previous Deputy Governor for Monetary Policy at the bank, has called the nasty period, which is for not as tranquil years for monetary policy. And as you become more uncertain about what's driving inflation, and you become more uncertain of your ability to control it, you move in this southwesterly direction. The ability to rely on private markets to do the work for you because they understand how the whole economy works and you have a shared view of the world, that becomes more and more challenging. And the suggestion in this chart is that we have moved in this southwesterly direction over the last 20 years. And crucially, in most recent years, we've had a series of very big shocks, the pandemic, the invasion, the global financial crisis, that really draw a thing where it's very difficult to know what the implication of this can be, and it also is affecting how monetary policy settings influence the economy. So the dimensionality of the uncertainties being faced by monetary policy is substantially increasing. And you can sort of see this in this chart. What this chart says is really pre-financial crisis, so up until here, you could predict what the MPC was going to do with interest rates pretty closely. So the red line, which is the prediction, sort of leads and follows the blue line, which is kind of MPC decisions. You can predict that pretty closely just by looking at an indicator called the Purchasing Managing Indicator, which is an indicator of activity in the business sector. So that was a period where you looked out and you knew where the supply side of the economy was going to be. It just grew in a very steady way. And all you had to do to kind of work out what the pressures on resources of the economy was going to be was to look at where is activity in the future. And we had a very good indicator of where activity in the future was going to be, which was this PMI indicator. So policymakers could look at that indicator and say, in a year's time, I know that activity is going to be stronger, demand is going to be stronger. For a very stable level of supply, that's going to put more pressure on resources and drive inflation up. But not only could they do that, they acted in this systematic way that financial markets learned they were going to do that. And as a result, they had this kind of mechanism where they were pricing ahead of time, choking off some of those inflationary pressures before policy did. And you can see the volatility in policy rates was small, and it was very, very predictable. But that world has broken down, and we started in the financial crisis. Of course, we got to the lower bound, and of course, we had other things. There is an attempt in this chart, which I won't go into, to account for QE. But what you can see is, post-pandemic, this relationship has really moved away. And why has it moved away? It's moved away because this set of uncertainties have been so big. Movements in activity no longer just reflect movements in demand relative to a stable supply. They reflect movements both in demand and supply, And as a result,
Ass.
they don't perhaps give you so much insight into what the degree of slack in the economy is. So the question really is, how do you deal in that environment?
You know, I never thought about launching the browser.
And I think the answer
and trying to
is
log into TradingView. I probably
that
could.
you have to take uncertainty
I probably
more
could trade
seriously.
from the car.
So one type of this uncertainty, and this is not the ubiquitous form of uncertainty that I've been talking about, but one type is to recognize there may be uncertainties around where the supply of the economy is. You may mismeasure the supply of the economy, the potential of the economy, or you may mismeasure the neutral or natural real interest rate of the economy, the point at which monetary policy is not adding to or subtracting to inflationary pressure. So if you're going to mismeasure those things, what does that imply? Well, it implies that you're going to have bigger losses because these errors will enter into your various policy decisions. And this isn't just a sort of theoretical concept. This is a very practical sort of set of issues. These two charts show developments in productivity in the UK. And it looks like, for long periods, that productivity is pretty standard rising, it's pretty stably increasing. So that's the type of environment where monetary policy is perhaps more straightforward. But in 1973, at the time of the oil price shock, at the time where the great inflation was beginning to take off, you can see that unexpectedly, productivity fell very significantly. And I think it was the failure of monetary policymakers at that time to realize there had been this big negative shock to productivity that led to some of the build-up of resource pressures and the build-up of inflationary pressures.
I mean, it could.
That are well known in the 1970s and 80s. What's interesting is if you then look at more recent times, you see a similar decline in productivity growth at the time of the financial crisis. And again,
you're pretty good right now.
At the time of COVID. And I think the open question for policymakers is, can you work out close enough to real time whether this is a permanent downward shift or it's going to reverse? And it's that real time element, it's the fact that you have to make the decision today in order to address that problem that I think is so key. So just to illustrate how that plays out at the Bank of England, the estimate of the output gap, these are taken from our regular quarterly monetary policy reports. If you look at today's measure of the output gap relative to the first measure of the output gap, I mean, on balance over very long periods, the errors go in both directions. But if you look at particularly the period since the pandemic, whether you look in unemployment space, which is the red, but particularly if you look in output space, we have continually revised down the supply side of the economy, meaning that there's been less slack in the economy than we originally thought. And it's that less slack in the economy that we originally thought that is the explanation, ex post, of the fact that inflation has been higher than anticipated. So where does that leave us? I think that has a number of implications.
The residents are US citizens.
First, I think we need to recognize that addressing this new, more profound forms of uncertainty is not a sidebar discussion around the monetary policy that we know how to do. This is the essence of the discussion of monetary policy. So a monetary policy strategy is all about how you deal with these types of uncertainty. I think second, we have to recognize that we are living in an environment of rising uncertainty and a different form of uncertainty than in the past. And in that context, monetary policy providing an anchor of price stability becomes even more important, such that it doesn't interact with other forms of uncertainty. What's crucial is, and I think this is sort of the open practical question that Professor Bernanke's review of the MPC and its framework prompts is, I think it's very much important, and I haven't had time to go into this, that we adopt a full information approach. So if we don't really have a complete knowledge of the model of the economy, then I think we need to look at everything rather than look at a small number of indicators. Looking at everything is a more messy process than just looking at 2 or 3 indicators. It's more messy than Maradona. There's a joke there about Argentine footballers, which I will not make. I guess I just did. But that full information is very, very important. So it's kind of managing the messiness to get the information you need. And I think crucially, it's an approach that says to make sense of that data, to organize the mess, you do need perhaps more than one single model. Historically, the Bank of England has tended to say we have one model producing one forecast as a single bundle for analysis leading to a policy decision. And as I think we go forward from here and we face these new levels of uncertainty, the Bank of England is going to need to look at new sources of information, but organize them through looking at several models. That begs the question of how you present that to the public. I think it will be less simple to present. And that's where scenarios and other forms of analysis come in. But I think it also begs the question of how you process these various diverse sources of information in order to come up with a single decision, because in the end, there is only one fact rate that's decided. And I think that will require probably moving beyond an approach that relies just on probabilities and looks to an approach that tries to manage the risks of different threats to price stability and seeks a policy response that's robust across those risks rather than optimized to one. And that leads me back to the main message I wanted to lead with earlier on. So thank you very much. I apologize, I went a bit longer than I intended, and let me open up for Q&A.
So, ladies and gentlemen, we have a few minutes now for Q&A. If you'd like to raise your hands so that I can run and just quickly pass you the mic. There you go. Could you say your name, please?
Yeah, when the
Great speech, everybody hear me? Great speech.
Yeah, my son.
So I'm Jonathan, I'm the Chief Market Strategist for Interpretive. I've just got one main question. I have more, but I'll try not to stray too far with monetary policy. So a core aspect of your speech today surrounds the idea that central bankers should adopt a more conservative approach. Because there's so much uncertainty today, rather than rely on these fragile, optimistic data points, if you want to put it that way, that are often transitory. So I argue that probably half your colleagues on the MPC adopt this sort of approach, which is to rely on these sort of outlooks by looking at the CPI hump that we have now. The food inflation hump, especially the administered price hikes. So I was wondering whether you feel the need to push back on these notions when you have these discussions with them at MPC meetings.
10 minutes away from New York
So that the MPC sort of gets not too complacent on the path of bank rate going down, so that it doesn't reignite a second round effect of inflation in this really volatile political and macro landscape that we are in.
So I think that's a big question. I'm not going to get into the details of too much about it, but what I would say, and I think it's the essence of what you're describing. Maybe I'll make 2 points. One is we have 9 members of the MPC, and they have different views. So one way of achieving this sort of multi-model or more eclectic approach is to have 9 people. Everyone has an implicit model in their head. And by having 9 people, you have 9 implicit models, at least. I mean, they're economists, they probably have more than one model in their head. So I think having the robustness is partly generated by having a discussion. And at the Bank of England, that discussion is quite transparent and open. Having a discussion between people who I think are quite experts in these issues, or these parts of different issues that are relevant, and they confront each other with different forms of argument. So I think that definitely fulfills this requirement, and it helps also fulfill this requirement because different people bring different information, and so the sum of information is larger than perhaps what any individual would bring. So there are lots of good things about having a multi-member committee. And I think that has been the experience of the NPC in the past. And certainly my own experience is I go to NPC meetings and I think I learn things, and I like learning things. I think it helps me vote better when it comes to me voting. I think what you're hinting towards, though, is, of course, this diversity. I mean, what you're describing is an aspect of this messiness that I was talking about, right? So the messiness here is coming from the fact, wouldn't it be easier if we could go back to the good old days, when we had a very simple model, everybody agreed to it, both inside the MPC, inside the Bank of England and across, and that would give us the answer, and everyone would understand, and we could rely on these mechanisms. And the point I'm trying to make is, that sort of view of the world does rely on the environment cooperating. Now, of course, we understood, or we thought we understood the old world, and I think we did understand it quite well on the basis of analysis and research that went on for a long time. But the world has changed, and as a result, we need to change with it. So I think the challenge for us is how to organize that messy discussion, both internally, and present the results of that discussion externally in a way that retains some of the simplicity and clarity of what was achieved previously, but without sacrificing the need to be responsive to the changed environment in which we're operating.
Thank you, sir. You blame inflation on the falling in productivity, but you haven't mentioned quantitative easing, which we interpret as you printing money, and that caused the inflation.
I'm not sure what the question there is, but I'll take your question out of that. So let me go back one step and say the main message. I mean, if there was a main message on top of the main message I described, the main message is central bankers have a responsibility and have to face up to the responsibility of achieving price stability. That is their task. That is what the NPC is mandated to do. That is not a necessarily easy easy task in some circumstances. So I don't want to say I am blaming inflation on any one factor, on lower productivity and so forth. The job of the NPC, the process that we just discussed, is to look at all the developments in the economy and interpret them in a way that says, we collectively think that this choice of bank rate and indeed balance sheet policies, as you say, that collectively we think that is the best way of achieving the 2% inflation target through time. Now that doesn't mean we'll achieve it tomorrow, because sometimes, and this is the essence of that simple model, but I mean it applies in more complicated too. Sometimes things hit the economy, be that a tenfold rise in gas prices or whatever we've seen. We've seen these things of late. Sometimes things hit the economy which have an effect on consumer price inflation and therefore on measured inflation more quickly than the MPC changing policy today, interest rates or so, can affect. There are lags in the transmission of policy. So we just don't have the machinery to set inflation on a day-to-day basis or a month-to-month basis. There will be some volatility in inflation. So I think the challenge for us is to kind of focus on this medium-term horizon, make sure we're setting proper policy appropriately to get inflation back to 2% credibly at that horizon. Have we done that perfectly over the last, I've been on the MPC the last 4 years, right? So have we done that perfectly? Well, if you look at the history of inflation, it's been volatile, but it's been volatile in a more volatile world. I think the question about QE, did QE cause inflation? I think QE was a response, going back to the global financial crisis, post-Brexit, and again, in the context of pandemic. QE was a response to circumstances where the interest rate had reached a level where it was perceived it couldn't be reduced further. So there was a lower bound perceived on the setting of bank rate associated with the fact we don't want negative rates which cause banks to lower their deposit rates below zero, which cause people to take money out of banks, right? So there's a set of issues there. If we believe that we've hit a lower bound and we still think we need to support the economy to achieve that 2% inflation target, one mechanism to do that is to do QE. So I was not on the NPC at the time these QE decisions were made. I've only come in on the other side of that. But at the time those were made, I would say that people were making judgments in very difficult circumstances. In the immediate onset of the pandemic, for example, where the fear was that we were shutting down the entire economy, demand was going to dry up, pressure on resources was going to collapse, and we were going to see inflation going negative rather than positive. The calibration of that policy and the interpretation of what the implication of the COVID pandemic would be, I think with the benefit of hindsight, and it has to be said the benefit of hindsight is pretty significant, you probably wouldn't have chosen to do all of those things in the way you did. I would recognize that. But what I would also say is, at the time those decisions were made, I think they were made certainly with the objective of achieving the 2% target in mind. And I think it's a bit too easy with the benefit of hindsight to say, oh, it was obvious there was going to be a vaccine, for example, by the end of 2021, etc. The types of things that we take for granted now, I think they were not so obvious then. So that's why I'm reluctant to be as critical, I think, as you are. And I certainly wouldn't want to say that the cause of the high inflation is just mechanically QE. QE was an attempt to stabilize inflation that maybe was miscalibrated, and we've had to correct through time.
Thank you. I was going to say there's one final question now, which is Paul, because in the interest of time. So Paul did quickly get in first. This is the last question. I should say you're welcome to join us. We've got drinks reception, obviously. So you can carry a note in the atrium over drinks. So one last question from Paul.
Thanks. Thanks very much. It was really interesting. I wanted to ask a quick question about uncertainty, because I believe it is very important to keep uncertainty in mind, and you showed how models can incorporate certain types of uncertainty. But well, I wanted to ask you, your thoughts on the different types of uncertainty. So I think in the NICE decade, the model that Mervyn was dealing with, we were talking about kind of additive uncertainty, where we add on certain amounts of certain errors to the models. But I wanted to ask you, your thoughts on multiplicative uncertainty and the possibility that maybe uncertainty is not as simple as just adding it on, that we've actually got to think about, is the type of uncertainty we're dealing with just creating something that we can look through in expectation it disappears because on average it's going to be zero? Or is it something that's a little bit more fundamental than that, and perhaps might even explain why we're seeing differences in trend growth rates for output and some of the other variables that you're concerned about?
So let me ask you a question. Sorry. Let me ask you a question in two ways. I'll try to do it. I mean, what this chart is intended to show is precisely what you described on kind of this vertical dimension. So like, the point I was trying to make is the model that Lord King talked about when he was doing this 20 years ago is a model that does have uncertainty, but it's a very, very structured, understood form of uncertainty. And as you know very well, if you kind of solve this model to minimize this loss function, I mean, again, this gets into sort of a bit pointy-headed stuff, but because this is a quadratic, objective, and a linear model, in fact, what you do in policy doesn't depend on how uncertain the world is, right? That's a kind of result which is powerful but fragile, right? And it's that fragility that I'm sort of trying to point out against. So in this chart, that world is not there's no uncertainty in the sort of top left-hand corner of this chart. There is uncertainty, but it's manageable uncertainty. It's understood uncertainty. Gas, food, and so, somewhat ironically, given what Lord King said in his speech, I mean, of course, his latest book with John Kay and so forth is talking about, well, perhaps we're in a world where there's sort of deeper, what economists might call Knightian or radical uncertainty, that's hard to associate with specific probabilities. And I think you kind of gave a discussion of potential spectrum from the knowable uncertainty to the unknowable uncertainty. I think there is a spectrum about what. So it's exactly that we're capturing conceptually on this dimension. And as you move away to these more fundamental forms of uncertainty, I think two things happen. First thing happened is mean, this is what I didn't have a chance really to say, but it gets to here, right? Is that there is a sense in which when you're in the world that we thought we were in 20 years ago, you can express the problem, minimize or achieve your inflation target with minimal volatility in inflation, so low and stable inflation, given this view of the world, given these sort of fundamental truths. You can express the problem, and there is a solution. And it's like a sort of, in that world where everything is known and agreed and understood and shared knowledge, defining the problem and defining the solution are really two sides of the same coin. They are the same thing. And so in the language of that literature, you can express it as a target rule, this is what we're trying to do, or you can express it as an instrument rule, this is how interest rates respond to a whole set of developments in the economy. But these are kind of back to back. Whereas I think once you get down further in this, you know, the kind of uncertainty has become more profound. And also you're getting more uncertainty about how what you do is affecting the economy, not just how uncertain the economy is without you being involved. So you're into this sort of space, then I think it's no longer quite sufficient to say, well, we are defining the problem, and by defining the problem, you know you need all you need to know. Now, of course, as I said, as monetary policy makers, we face difficult times, but our job is to maintain price stability. So saying, in uncertain times, we'll do whatever it takes, that's not an empty statement. That is a statement that is meaningful. But I think the challenge for monetary policy strategy and the challenge for the MPC
run on the market
in this more uncertain environment, where we face this more profound forms of uncertainty, is to try and say how we're going to deal with that and offer more insight. It won't be completely mechanical insight, but more insight in how we go from looking at data, things we can observe, and transform that into a policy decision that we can justify on the basis that it's serving our target. I think that does lead you to think more, well, A, we're going to have to think more about kind of instrument rules approaches rather than just target, in my view. I think it probably means that you're going to have to think about what criteria you choose that rule or that policy decision from. It can't just be sort of mechanically some optimization for a given set of probabilities. If there are possible events that you can't associate with a probability, then you're going to need to have to think about things like, well, how do we weigh the worst outcome, or how do we think about this different type of risk? So I think that's where our work, which is still embryonic and continuing on scenarios, is so key for the communication of the bank. So like by publishing scenarios, I think we're going to be able to say, here's the set of things we're thinking about, how badly could we do in different environments. We want to avoid that we do really badly in any one of these environments. So that's going to be a constraint on our policy decision. That's not to say that everything is possible, right? So we don't want to be able to, we're choosing a set of scenarios which is sufficiently plausible we think we need to address them, but sufficiently broad that we think we're getting that kind of robustness that we're seeking. And I think it's getting that balance right and being able to explain it that's key. The other thing I wanted to say, and again, I didn't have time to talk too much about this, but I think you kind of get to some of this by thinking about how you deal in a more narrow sense with uncertainties about these third variables, right? So the work of Athanasios Orphanides, who is a leading commentator on these things, I think it says, if you don't know what the neutral real interest rate is, or you don't know what the output gap is, pursuing a policy that says, let's set the interest rate, assuming we know those things, can lead you astray. So for example, if you say the neutral rate of interest is, let's take a number out of the air, 2.5%, and you think inflation is coming down, then you just got a path to 2.5%, right? You may debate how quickly you get there, but you know where you're headed, because eventually 2.5% nominal interest rate is associated with meeting your inflation target. But of course, if it's possible that that neutral rate of interest is 3.5%, then if you put yourself on that sort of relatively mechanical path, 2.5%, just when you think you're being neutral, in fact, interest rates will be lower than neutral, they'll be stimulating the economy, you'll be building the next build-up of inflation. Now again, that's a fundamental question. The real answer to that question is, have a better estimate of our star. Well, I was writing about this in my first published paper 30 years ago, and Professor Fry was the referee. 30 years on, we still haven't solved that problem. So pretending we've solved that problem when we haven't, that's the type of fragility I think we want to keep out of monetary policy decisions. And so what Orfanini suggests, and it's an approach, it's not necessarily the only way you could do it, is to say, well, let's think about policy in terms of changing the interest rate. Because if you think about changes in the interest rate and relating them, is inflation too high or too low, then it's sort of a little bit takes out some of the uncertainty about what the level. Now that will come with costs. If we knew what our star was and we were setting policy by changing interest rates rather than moving the level, we'd do worse. But if we consider different views of the economy or different models of the economy with different R stars and we don't know which one we're in, a more robust approach, one could argue, certainly Athanasius argued, is one that focuses on changes in interest rates. So I think these are precisely the types of debates that should and are happening at the bank and within the MPC. I mean, they're not, I don't know how well I've done this afternoon, but I don't think they're easy debates to communicate, right? The world of you're going to get to 2% inflation and we'll set interest rates to do it and trust us because the economy is this simple and you know it's that way, I know it's that way. We can all predict what the interest rates are going to be in this kind of pre-financial crisis world. I think that's a world that if you try to think we're still there and you're not, you run a big risk. So that's those kind of going back to eternal verities. It doesn't depend what those eternal verities are. It does depend whether they're either eternal or true. But I think you can't avoid having to make those type of decisions.
In the microphone.
So, ladies and gentlemen, we must close the questioning now because of the time, and we've reached the end of time. We're going to have some drinks in the reception just outside, so you're welcome to ask more questions informally and drinks. I'd like to thank those people who have participated in the questions, and I'm sorry we didn't get to the people online, so thank you everyone online also for joining.
Well, 2 more 9 minutes into New York lunch, you know what that means. We're going to have a lack of volume here, especially with this huge push.
Hugh was very popular when he started lecture. He's still very popular now. He's given us lots of nice and nasty ideas and food for thought.
Much selling,
on how
well
we
over an
develop
hour,
research
just
ideas.
grinding up.
I know there's a lot of work going
Last
on
read
here,
15,
developing new
10
measures of risk and uncertainty scenario analysis, which is what we study here in great detail. I would say that Hugh Hill is actually the perfect speaker for this lecture, having come the same route as Max. He's actually doing the very same job that Max Fry did in the banking, and Max Fry established the Centre for Central Banking Studies. I'd like to thank you for participating, for joining us today. And I'd also like to thank the huge backup team that we have in operation to put this lecture together. Shafifa Jacody, Candice Hopkins, Kelly Merriman, and Joe Hill. So thank you very much, everybody, and a particular thanks to Hugh for an exhilarating lecture. Thank you.
The dang things. Break 125. 125. All right, gold's waking up finally. Silver is actually starting to push as well. Gold is monetary policy for the all right, there you go. There you have it, team. There you have it. Oh, let me get OBS back on. Get the correct chart up for you guys. There you go. Should be on the right chart now. Perfecto. And there you have it. There's our monetary policy. Not much for news, though. Not much for news. A little lackluster. I was expecting a little something more from them, but yeah, no. CNQ real quick. Oh, here's that high. It's going for it. Was that nice push on NQ? Man, I wish I would have held those longs. We could have had another $7,000 trade on our hands today. You know that team? So upsetting. Oh man. Huh. Look at that. Bitcoin is catching a bid. Gold is breaking out. Oh my God. Let's do it. Your silver calls are 50 cents out of the money. You want to know something that's kind of cool, General, that I found out from Weeble? So if you get a cash account with Weeble, right? You get a cash account and you sell your options contracts, you know that they will let you have your money back the same day, like instantly. They will give you back your money right then and there when you sell your contracts. You do not have to wait the following day for your cash to settle on the cash account. You know that? Now, the funny thing about it is that they give you disclaimers. Yeah. So they give you disclaimers that the money is available for you to trade for swing trades. If you do a same day trade, they'll give you the same thing as a cash account. So if you're under 25,000, you get three trades in a week, you get PDT rules. They still do the same, but this is not the way the PDT rules are. Instead, what they'll do is then they'll restrict your funds, and those funds will not be available until the following open. So it's a courtesy that they do right at the beginning. But if you break the rules, you know. Kind of interesting though. A little interesting nuggy. I was like, oh, that's interesting. I also found that if you let the contracts expire, or like us that we trade XSP and those contracts cash settle at midnight, it won't trigger that. So if you just let the contracts expire and don't make the trade on them, you won't get caught that you've been doing PDT trades. Just a nice little something, but the obvious other side is you have to be disciplined because all your money is going to be available to you. So you can't turn around and be all gung ho, trigger happy, thinking that I'm going to go and do this and that, because, I mean, you'll still be able to trade like you would a normal cash account, but you won't get your cash freed up before then. SPX just broke over yesterday's high. Let's go. Man, those 676s are 30 cents on the ask now. Yep. Yep, General, that was horrible. I bet you that just kind of sunk your contract's value like instantly on that. Yeah, it brought them back down to 22 and 19 cents from that high. Yeah, that's why, I got no reservations on selling my contracts, man. It just doesn't bother me. Short the top. There you go, tipped. Short the toppiest of tops. All right, we're about 20 seconds from the bottom of the hour, halfway through New York lunch team. To 16. Oh. It's like that one meme where bears get excited after 10 points while the market is up 1,000. Yeah. No, bears are dead today. Shh. Yeah, man. Yeah, the bears are definitely cooked today. Definitely running another special on bear meat today here in the market. And what we're gonna do here now? It's got us up here. The Mag 7 gonna continue to rip and send us up. I tell you, I got my bear claw shoes. I'm ready. I'm ready. I'm gonna try to see if I can just short it from here at the top. Stop at the wick high. Try to get this down to the 90 MA on the 15. That puts us at 25, 225. We'll see though. It's a little low. I'm always excited. Market goes up, market goes down, market ranges. The only thing that angers me is barcoding and being on the wrong side of the trade. Oh, and peeps. What? What do you mean peeps? What's wrong with peeps? Man, what are you talking about? There's nothing wrong with marshmallows covered in sugar. What where did that go wrong? Well, I'm not digging this. Cancer marshmallows. Cancer mellows. Oh my god, y'all are crazy. You guys are crazy. You sound like my wife now. My wife says that. Oh, I gotta be eating that. Like, chita. Don't judge me. Hey, look, I'll be 50 in December 11th. So I made it. I made it here, with my peeps. Sell's kind of working right now. It's Bitcoin doing. Will you hurry up and get out of this range? People are waiting. Look at gold. I hope you have a stop limit set on that, General. I hope you're not, just unprotected out there. I'm watching my words because you guys know what I want to say.
Short America.
Never short America. I know you are, Q. I know what you want. This is what you want right there. That's exactly what you want right there. That's exactly what you're looking for. I'll take it. I'll take it. Gold pushing 4,079. Let's go, gold. I love gold. That's just beautiful. So yeah, I'm telling you, I've been working on the next thing I need to add is some soundboards. I just need to add some soundboards. I'll be perfect. I just need like some transparent visuals, like I could get like a flash of something. I don't know. No, that's a good point. Oh, we're on the 26. I think I'm a little too far. Yeah, I think I'm a little too far. God dang it. I should have went to the 3 so I could have seen where the 26 is. Should I put my stop in the money? I don't want to take a loss on a green trade. I'm gonna put my stop in the money because yeah. We already had a positive trade. I'm willing to capture just 40 bucks off this trade, but we push a little further down, we Gucci. Come on. Come on. Push it down. Give me a little $300 right there. Come on. Do it. Do it. Come on. I don't mind getting stopped out. I don't mind getting stopped out at all. Most of the time, my stop's in the money anyway. So all it's doing is making me take profit, and ain't nobody went broke. Ain't nobody went broke taking profit. Profit I can go buy groceries with, you know? 'All right, there we go. Look at that. Come on. Come on. Just give me my money. Give me my monies. Give me my monies. Come on, we're so close. It's a quarter. It's 50 cents. Come on. Just do it. Just push it. Push it. Push it. Oh, oh my God. Come on. You were a quarter away. Just push it. Don't buy it. Oh my God. Oh, 15 minutes till the end of New York lunch team. Oh, wiki now. Come on. Wiki, wiki, wiki. Get it down. Man, I'm out of coffee. And there you go, team. And there you go, team. Another successful trade here in the intraday. All called out on chat. Explained it, set my stop, trailed it, took profit. Thank you, Butter Toast. Thank you, sir. Yeah, we've had a pretty good week this week. You know that? Managing our losses, had some nice gains. Yeah, that's a heck of a day. A little over $2,000 on the day right there in just futures trades. Doesn't include options portfolio that's up. What are we up for today in the options port? We're up 29% on the day in the options port. Let's go. FBI. I got busted or what? Can't be making profit. I know. I only did it for a few minutes though. I'm not gonna lie, Tipped. It's scared. Well, I'm glad that Tip doesn't know where I'm at. He has a general idea of my vicinity, but VPN is on, so you know, we Gucci. Short to zero. That's what I'm talking about. We're not shorting to zero. Never trust cats. Never. And if you own a cat, you are what, 25% more susceptible to developing schizophrenia. So I for one will never have a cat. Oh man, that sell is really kicking in now. Woo-wee. Oh man, we're gonna give up that old move. Yeah, I'm glad I'm not long S&P and NQ right now. That's for sure. Straight up selling. Did you get stopped out, or are you just holding that like no stop? You're not. Oh man. Okay. Okay. Yeah, RQ generals and some XSP 646 calls, 676 calls, and yeah, they're down to 13 cents now. So he's a few dollars green still, but barely, not much. They were close to the money. Yeah, I know they were. You had a beautiful, looking at them. The peak on that was 34 cents. You should see the way I was looking at it. I need to move this copy and paste. It's on a whole different area of my stream deck. I'll do that after this. Check this out, General. That's your contract right there. That is your specific contract right there you were in. I wish I would have managed my stop a little bit more, because I could have probably squeezed like 26 cents out of it. I'm fairly certain, but you know, another 9 more cents out of the contract. I mean, that's whatever. Not a big deal. I did what I wanted to do. You know, traded my plan. That's all that matters. I traded my plan. And my Bitcoin calls are up 14%. Let's go. They're at the money, so. Ba, 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 da, ba. Oh, come on. Just do the damn thing. I did not see I got above 30. My target was 36. Yeah, they hit 33 at con. I just had too much stuff going on, so. ES selling. Bitcoin looks like it's pushing. 8 minutes from the top of the hour. Coming out of New York lunch, fam. Now I have 30%. Would have gave me 300%. Now I have 30%. That's why I sold. You know, that's why I trailed it. You know, I was just like, as a matter of fact, I didn't even trail it. All I had was a sell target. I had a resting sell order there. Five minutes. We got the 10-year note auction coming up. You know what? I'm gonna copy this shortcut key over, because I need this for my day trading stuff. I'll put it right there. Yeah. Perfect. Oh man, silver dipped. Well, if the market pulls back, you probably will see that from the precious metals. Solid trade though. That's why I didn't go for silver or gold today, because I felt they were already extended, and you were really chasing them. You know, we weren't in a. If anything, I probably would be looking at shorts, just because they've been pushing all morning. Let's take a look at silver real quick. Like, yeah, silver for sure. Did I get a sell signal over here? I haven't gotten a sell signal on silver yet, though. It's close. Only solid trade. Only solid trade if you get out. I mean, I made it out. You had a lot of opportunities. I mean, think of it like this, General. I know you want the 300%, right? You want the 300%, but the realistic truth is if you were already at 290%, why not have that stop at least at 50 to 100%? That way, if you get the pullback, at least you've doubled your money. Doubling your money in the course of what, 3 hours? That's just not bad. It's all good though. We got time in the day. The market's still holding on the 26. All right, all right, all right. And keys still pushing up again. Look at that. Look at that go. Oh, my Bitcoin calls are, yeah, they're pushing now. Up almost 30% on these. Hex yes. Let's go. Send them. Got 1 minute. Got 10 seconds for those numbers to drop. Looks like you might be catching a bit off the EMA there. Gold is gonna hit 4,100 today, isn't it? The up move is unrelenting. It's possible. I mean, it's going for it. So, I mean, for the time being, we'll see what's up. All right, team, we are out of New York lunch now. You have to put it backwards. So the stop price is what the price that engages the limit order. So the stop price has to be higher. So you'd have to put it at like 18, and then your limit price would be at like 17 or 16. So it has to be lower. I I totally hate how that is. That is so unintuitive. It makes no sense. I'm so digging not being there anymore. Those are cool. Those are like Wu-Tang cleats. Uh, I think you're rejecting now. it's a market stop. What happens if prices, you get slippage. If price moves too quick through it, you'll get slippage just like on the futures. And NQ's pulling back. Bitcoin looks like it wants to test the intraday highs. Gold flagging. I'll be back in a second. I'm gonna grab myself a little something to drink. In general, no, stepped away for a few minutes just to go, yeah, just take a little breather for a minute. Grab myself another water, put my, clean up my desk. I had my morning stuff, cups and everything else from getting my morning started here. So, and I just doing that good stuff. Oh, look at that. Wow. Bitto calls her up 85% right now. Woo. Bitcoin repping now. Bitcoin's doing the thing now. Yep, that too, bro. I needed to. You didn't know how to use a stop? I put it on that. Yeah, volume is kind of low right now in general. You got about 1.8K orders on the chain right now. So yeah, it is fairly low. When I first started on Robinhood, I didn't know how to use a stop. This should be illegal. Illegal. Yeah. Tell me about it, bro. Yeah, I used to have a heck of a time dealing with their platform. I've had I've had some words with them. Let's just say that I haven't been real happy with my experience on their platform. I'm much more happy now that I moved over to Webull. Much easier to manage my position. Just overall the experience is just 10 times better. I will say this though, the support at Webull is worse than Robinhood. Robinhood, they actually have moderately decent support, but Webull, I asked their trade desk some questions last week. They didn't respond to me till like the following day, like an hour after the previous day I did. So it took them almost 25 hours to answer a simple trade question. Doesn't matter, but hey, there you go. The stop don't get hit. Must have quit. A gold turning. Made that touch at 8,000 4,081. I am sorry, 4,081, and then just said negatory, illegal. Yes, and then Q still grinding higher. Push that reset button, huh? That's right. Get those resets. Hey, but you know what? If you don't want to pay for a reset, you can get a new account. We got those launch plans on sale for $49 tip. You're in the gulag, bro. Who put RQ in the gulag? Goes in Q. Trying. Right on. So there you go. Yeah. I remember getting stuck in the gulag when I was playing COD. I haven't played COD in a minute. I have a friend of mine that was playing CSGO last night. I think I've actually been wanting to play that more. It's a grind, but I don't mind it. Hey, but you know what? I'll say this, RQ. You guys do a great job taking care of members, because I don't hear any members saying that it's taking them an exuberant amount of time to get an answer on their question. So great job. Keep up the hard work, brother. Keep helping those traders. Never seen RQ answer a ticket. It's bait. Well, RQ never sleeps. They got that guy just 24/7 at his desk. Hoorah Gold. Yeah, we're getting that kind of lack of volume. It's kind of troubling because, you know, if the Bulls can't do anything, the Bears will step in and they'll just take the market from them and start to sell it. Let's just see. I mean, I haven't gotten a sell signal yet. You make your decision, bro. You do what's best for your portfolio. Doesn't matter what anybody else thinks. I wouldn't break even though. I'd go for at least some profit. You'll ever see this, son? Don't know if you don't know how to see this, or if you guys would believe the story. The devil made me do it. The devil made me do it. Come on. It was the evil spirit. It's hilarious. I never heard that, never seen it, nothing. It's great. There you go, General. Getting that push now. Bitcoin don't want to do it. Chihuahua con esta cosa, man. I tell you. Bitcoin is starting to catch a bid. Oh my God, what is happening now? What's going on? Let's go. NQ got a rowdy wick at 25,290. Just insane volume. Just push that up. Look at that wick. There you go, guys. You got that upside target now. 25,290 to the upside. crazy push up with the rejection. Look at that. Even on the 15-second, it's on a wick. That's just crazy. Look at this. The 5-second, and it's still a wick. It's not even a candle. It's a wick even on the 5-second. That's crazy. So much winning. There you go, RQ. So much winning, brother. You like my winning? Tell you, I've been playing with my my pop-ups. I got a few more. I just haven't added them yet. I'm actually searching right now. I was searching earlier, getting myself some new ones. I closed the gold short and the NQ long red. I was almost gonna get out of my Bitcoin long. That's about the only. Well, no, I'm still long on the market, and yeah, I'm long on the market, and long on Bitcoin right now. So, yeah, there's that. Oh my goodness, could we get out of? Man, I'd love to get out of this position. A little bit of a rejection there on NQ. Bitcoin's ready to do it though. Oh yeah, let's do that. Let's try to get out of this. See some people loading up on puts on the market. You got to know, pump it up. You got to pump it up. Bitcoin is starting to push now. 124,910. Some of that sell is now pushing on the NQ. Well, I know, General. I know you ain't liking it. Come on, Bitcoin. Do the dang thing. Well, I got my stop on my Bitcoin trade. $16. Yeah. One minute till we get the FOMC meeting notes. So get ready. I'll drop those numbers. All right. All right, Nacho. Hey, you take me with you, bro. don't want to push it any higher than today. Ten seconds. They're basically saying that, you know, the half a point was what they agreed upon. JPY going for the next leg down. Let's see if we can get that press release for you guys. Drop that in chat for you guys. They're saying that they just needed to give us the rate cut because of inflation. Dollar is moving up a little. Stock indexes aren't making much of a move. Bitcoin a little bit of a rejection there. Trump currently has no plans to travel to the Middle East to oversee the signing of a deal to end the war in Gaza, according to Axios. Oh, let's see. Come on, Bitcoin, send it. Fed minutes. Most said likely appropriate to ease policy more this year. So we should see some policy loosening here in the, you know, towards the end as the year continues to go by. A few officials could have supported no rate cut in September. No rate cut, Come on, Bitcoin, go. Send this thing. We're at the top of the hour. Participants generally noted their judgments about appropriate policy actions at September meetings reflect a shift in balance of risk. Majority of participants emphasize upside risk to the outlook for inflation. A few participants noted standing repo facilities would be what's this thing keep oh man, what you just get will keep the Fed funds rate in target range and ensure money market pressure would not disrupt ongoing quantitative tightening. All right. Gold's selling now. Gold starting to sell. Yes, NQ with a little bit of a rejection. Got a sales signal on Bitcoin right now. I raised my stop. I'm at least gonna keep 100% off this trade. Not gonna let this thing go under that for me. Not sure why, but I always have one special account that that's just the way it is, bro. That's the way it is, bro. A lot of it is session to session, but my losses generally come from the New York session when I'm not able to manage trades as much or I'm just rage trading. Yep. This is exactly why I do that. You know, I like the after hour session, you know. Why do I get these notifications? Oh, that's not bad. Market's still racing to the upside. Oh. Fed staff revised up GDP growth projection for 2025 to 2028. One participant preferred a 0.5 percentage point rate cut at last month's meeting. Almost all participants supported a 0.25% point cut to the Federal Reserve rate at the September meeting. So very interesting. I'm not much into holding trades, overnight sessions. I have an orb system that targets fib extensions. Sometimes it takes hours in the overnight session. I found my London targets can take all the way to the New York to hit. I've also found the system works like an 85% win rate on gold. So I trade NQ sparingly. Nice, RQ. Yeah, good stuff. I'm here for it. Goes NQ. Looks like it wants to push up 10 minutes after the top of the hour, team. We're an hour away from power hour. I hope you guys have had a great day. You know, it's been, man, we've had some killer trades. You know, I called out 2 live trades here in the morning session. That first opening trade, we were able to capitalize on it for about 1.9K. We took a short there, coming out of New York lunch. We ended up making like 290 off of that. So we're up a little over we're doing all right. We're doing all right in the morning session. That's 2 green days in a row. You know, we've also got that XSP trade that we took. You know, now we're just waiting for Bitcoin, and you know, what's the rest of this market gonna do? You know, don't forget, like I said, we've got an hour to power hour. We've got our great coach, Coach Matt, coming in for power hour. So stay tuned for that. You know, traders, don't forget, Coach Matt has his great trading class going on every Thursday. That's right. If you're looking for a mentor, looking for a trade coach, then look no further, because we got one here that we offer to you guys as a community free every Thursday. My Clockwork, he's there ready, waiting, and with great curriculum week by week. So if you're missing out on that, you know, I don't know what to say. And if you're looking for an edge and how to find an advantage in the market, then yet another reason to stop into Coach Matt's awesome trading class. Hey, what's up, Hamza? Good to see you. Hope you're having a great trade day. I think he's gonna go. I mean, Bitcoin looks like it wants to go. Can it break this level though? It's got to break this range. Most of the time, yes, hard stop with the set targets. It's been to the tick on gold, if not off by 1 or 2. That's awesome. I'm glad to hear it. Because ES is trying. Gold didn't like the minutes. Neither did Bitcoin. And it looked like we were gonna go, and then all of a sudden, just now, oscillators turning down on it. Oh man, yeah, I got this thing all choked up. I just don't trust it. That, and I'm up pretty green on these, so I rather get stopped out than run the gauntlet. Whew. Getting that sell signal on Bitcoin now. Haven't gotten a sell signal on NQ yet, though. Yeah, NASDAQ hasn't thrown a sell signal for me yet. Gold starting to sell. NQ still pushing. Let's go. Let's go, NASDAQ. Send this thing. Well, I just got stopped out on my Bitcoin long. All good. All good. I'll take my profit. I'll take my profit on that trade. Not a bad day. Not a bad day at all. Up 42% for the day now in my cash account. Gold rejecting. Bitcoin throwing the sell signal. Not the case with NASDAQ or ES. Just been a solid just grind. I like it. I can get filled on something like that. Jeez Louise. Yes. That's what I wanted. Solid trade. I'm gonna go get some more water. Be right back. Yes, it's going to break out. Capital flows coming from JPY into the US. Yeah, quite possibly. Bitcoin kind of pulling back. 4 minutes from the top of the hour and 36 minutes away from power hour, team. We did it. Or 34 minutes? Yeah, 34 minutes. Yeah. Let's see. Yeah, our market kind of stalling out here. Market kind of consolidating. We got our high of the day right now at 6,802 on ES, 25,297.50 on NQ. Gold just coiling. Bitcoin rejected. Well, I think I found the memes I was looking for. I think we are loaded up with all the memes I could handle. Oh man, Marvel moved. Wow. I was kind of running through the market just to see what else I've seen kind of moving. This was Bitcoin, right? Yes, Bitcoin is the right one. No, it's futures. Tether, perfect. That's the one I want. It doesn't look like there's no volume on that. That's better. Take a look at the heat map. Yeah, on the S&P. Yeah, I mean it's pretty self-explanatory. You know, the S&P is just green across the board, so fairly easy to understand that. Would you say reasonable stop is under the consolidation right now? Yep. Well, the market is starting to kind of come in on itself now. Yeah, I'm definitely digging the new layout. You know, if there's anything on the layout that, you know, I'm streaming, if you guys would like for me to add, let me know. Oh, get out of here. Is this thing actually moving? Oh, it's dumping. Somebody had brought up AI a couple of days ago, and I mentioned how it didn't get over the 2050 mark, and I just gave up on it after that. Looks like I was pretty much right on that. The move that I was anticipating it to have, it just didn't get. Although, you know what? What about AI calls for next week? Oh, we're already way up. You know, I heard some news about Ford the other day. Let's take a look at Ford. Wow. I heard some news about GM as well. Wow. You know, they were supposed to get some kind of crazy tax credit. This is terrible. Yeah, bought all their existing inventory so they could pass the credit for longer to customers. Oh. Just crazy, man. We don't get anything anymore, man. We got no tax credits. You know what we need? We need a good old fashioned what is it? What was that? What was that check they gave us? we need good old fashioned stimmy. There you go. We need don't tell Tim. He will lose it. No, we don't need those stimmies. I'm just joking. Oh, that's right. Nice. Yup. I made some money with it, and then I made some money with it, and then I just moved it. I was like, boom, done. Zero zero DTE Tesla was a what? Shh. Yeah, I remember that. Oh man, yeah. That's how it goes, bro. That's how it goes, man. That's how they get you. I think it's gonna be there. Okay. Fix something. Wanted to fix. That's what I was trying to get. Oh, there goes the S selling now. Nine. There we go. Okay. Is it time? Is it time for the short? $25 275 is a prior high. That's where we're at right now. Let's see what we do here. You know, we're gonna hold the base. 15 minutes away from power hour. Man, I should have thrown something in the micro for myself. Yet again, another day I mess up my lunch. I'm so terrible at that. I have the worst eating habits ever. You know what? Yeah, I'm gonna do that. Let me throw something in the micro so I can munch on it before Coach gets over here. Be right back. Got 15 minutes till power hour, team. NQ is at 25,276. ES is at 6,795. Got Bitcoin at 2123, 524. Gold at 4,069. Hey, Coach Matt. Welcome to the stage. Good to see you. Good to see you. Right? Day two has been amazing for us here. You know, yesterday, phenomenal morning trade. Today, yet again, called it out here in the morning session. Got a great long. Sold too soon, you know. I'm afraid I was a paper-handed trader this morning, but you know, I still took profit at about 1.9K. So, you know what? That's still a fantastic day. Yeah, I could see that. That was Monday's high, I think it is, right? Hmm. Correct. Mm-hmm. It'd be interesting if we break out of this bird flag, this bull flag. Mm-hmm. Yeah. Saw that. That spooked. Mhm. I agree, it's good. Oh, look at that candle. Cool. Huh. That's interesting. The CICD also is having their live stream event. That is the Indiana county, and Federal Reserve System. So national leaders there are talking about economic prosperity in Indiana and share their, future economic goals and visions and stuff like that. So, mhm. Yeah, yeah, Minnesota Fed. Hmm. Mhm. Mm-hmm. There it is, pushing now. Oh, Crush Kari is speaking now. So good luck. Be safe. I'm flat right now for the moment. That right. Wow. Come on, AQ. Do it. Pushing 25,307.75. Let's go, Nas. Dang, is General still... Is General still in Discord? No, he's gone. I wonder if he still has those contracts. Oh man, they're like 5 cents. He probably, hopefully he got stopped down on those. Steve hasn't. She kind of is. What do you think, Coach Matt? You think we'll have a blow off top on this? It looks like it's primed and ready. You hear me, Coach? Okay. Just making sure. I was noticing my connections. I was getting some drop frames and stuff. I was just like, just gonna wave it out. Might very well be. Just want anybody to ask him questions. It's the easiest way to get around that. Do it pre-recorded. Yeah, there's no way to ask questions. Coach Matt, do you use OBS? Okay, cool. Okay, perfect. Sounds great. Sounds great. We just got to figure out, what time after market close on Friday. Yeah. I'm free all weekend. I got time after Friday. Yep, exactly. Gold just gave it up. Not enough time in the day for it anymore. Mm. Well, you're right. It was a pretty clean move on the Dow. It gave it up really early in the day, though. Look at that. That's really interesting. Huh. I haven't looked at it. Yeah, I normally don't. Could be market makers just, playing both sides of the market, moving money from one side to the other. That's where you see that big order flow and the move in one side to the other. The market right now, it's looking like it wants to turn right now. What an explosive week so far, though, Coach Matt. I've got to say that. Oh, okay. Okay. Thank you much, Coach. Always a pleasure. Have a great one. Be safe on the road, Coach. Yeah. Hey, Psych Jeans. Did I say it right? Congrats to Blue Live. Where's my profits going? Last 15. Let me turn my news on just in case. Let's see here. How's everybody's trading day been? Hasn't been too bad. Week's been pretty good for us. I think mostly everybody's been doing all right. We live stream Monday through Friday, open to close. We should have diamond handed with Hammy. It's probably coming. It's probably coming. Yeah, we got Fibs on next week, so he's probably gonna bring the only men's. No, I think I did all right. I managed my trades pretty well. I think I traded my plan for the day. I've got to say, I think most days I do, and regardless of anything, Oh, what were you in that you didn't hold long enough? You know what? That futures trade. That was the trade of the day right there. I gotta say that we nailed that early this morning, and I could kick myself in the butt for not holding that because I mean we could have had another banger of a day. But that's why we show up every day for work, right? But yeah, sections. We stream here Monday through Friday. We also have a live day trading class every Thursday after market close. As of lately, we've been having some guest speakers on every Tuesday. So towards the close of the bell, and then at the after hours, we've been having a guest speaker. Market Mamas has been on the last 2 weeks. We've got another trader called Fibs coming in next week. So yeah, stop on in whenever you like and stuff. Coach Matt and myself are actually going to be working on some podcasts now. So we're going to be putting out like a Sunday podcast for you, for all of our community. So that's going to be something. I really want to do it like, if we can get it recorded by Sunday or Saturday, that way we can have it all wrapped up in production Saturday afternoon. And then boom, it's out on the interwebs for you guys Sunday morning, sipping on some coffee, getting some, market prep. Then you don't have to worry about having to meet at a specific time. We've got the podcast out there for you guys that you can listen to it, all the way up until Monday or whenever, for that fact. So, that's something really cool. I'm excited to, It's something, you know what? I've always wanted to do it. I always wanted to do it. I didn't have necessarily the place, and I already had a bunch of other projects going on. So I'm looking forward to this. It's gonna be perfect. I'm digging the new layout. I'm gonna do some more work on it tonight. I've got a few more ideas on some stuff, and I need to add in a few more frames and stuff, and then we'll be golden. We got a market imbalances coming out here in the next 2 minutes, so let's see how those come out for us. All right, did I get that? Yeah, it's gonna be kind of interesting how we get these imbalances, you know. Will they be buy, sell side? Probably not gonna see much of a move. Three, 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 go, go, go. Never in doubt, bro. Congratulations on that trade, bro. That's an awesome trade. Got 7 minutes to close. 7 minutes to the close of the New York cash session. We got 5 minutes to the close. Let me get those imbalances for us. S&P buy side 408 million. NASDAQ buy side 504 million. Dow buy side 257 million. Mag 7 buy side 298 million. So across the spectrum, all buy side imbalances. Wow. That's okay. They're still looking for it, huh? Institution gonna take this to the buy it to the top side. I mean, there's not enough time for that because we're at all-time highs, but yeah, the day's out tomorrow, next day and stuff. We're gonna pop. Should pop out. Red. The NASDAQ. Crazy. Such a strong market right now. Casual 65 points. Thank you, fam. Steak time. Congrats, Hammy. Hope you had a great day. 333 half devil. Ooh. And thanks again for everyone for tuning in and hanging with us here in the Discord. Our YouTube viewers and subscribers, thank you all very much. Don't forget, if you all haven't already heard, we've got a great Discord. We've got some great free classes to help improve you as traders, give you an edge in this market. So make sure you take advantage of those. Sales going on right now. I've got $100 flash sale, and I believe Sunday. Let me double check. Let me dot my I's and cross my T's. Ends on the 12th. That's Sunday. So check that out. $100 for 100K, 20K, 300K, all accounts, all platforms. Sorry. 15 seconds till close. Ding, ding, ding. There's your bell team. And there she goes, starting to rip to the upside. Let's see how it pushes in the after hours. Thank you all very much. As I said, hope you all have a great day. Tune in tomorrow. GG's. Cash money. We came, we saw, we conquered. Great trading team. Great training team. I'll see you all tomorrow morning at the bell. As always, good luck at the market team. Have a great day.